you caught everyone's attention, Tasha, of course, a little bit earlier in the year with your view on where Tesla's price target will go to 3,000 as your general case by 2025. What did you hear today that excited you?
Well, I'm most excited about Tesla's opportunity in autonomous driving. And what we saw in this most recent release is that, they do plan on releasing the FSD full self-driving beta version of their city streets autonomy software to more customers soon. Tesla also mentioned that they're realizing that with their new vision system, that radar is becoming unnecessary sooner than expected. So I think this has been a long time coming. Tesla has the largest deployment of robots in the world. If you think of each car as a robot collecting information, and I think now as we're seeing autonomous vehicles commercialized for the first time, Waymo was first commercialized in the U.S. I think Tesla is a real player to watch here with their scale and data advantage.
Is it bullish or not when you hear then of like a Lyft getting out of that and selling on to Toyota?
I wasn't too surprised to hear that. We've seen a lot of shuffling in this space. Most recently, GM also acquired a company called Voyage, and they had acted as if they were close to commercializing, and an acquisition would seem to say that maybe they're not so close if they have to integrate new technology and a whole new team into their team. I think this is a really tough problem to solve. And I don't think every company is going to be successful. In fact, we think the auto industry is going to consolidate significantly over the next decade as we see the shift to both autonomy and electric vehicles. So I think you'll continue to see more shakeups, and really whoever launches and gets to scale soon will have an advantage in this space.
Of course, there are plenty of other reasons as the thesis of the valuation and the view that you think it's going to get to an annual revenue of $700 billion. There's its capital efficiency, its insurance business. Where, therefore, do you think its capital efficiency is going at the moment? What did you make of, how its cash placement is, what it's doing with Bitcoin, how it's driving, down the costs of making each car?
Yes, we've done a lot of work on this space. So my partner analyst, Sam Forrest, has modeled the cost decline of electric vehicle batteries using Wright's law. And so Wright's law says that for every cumulative doubling in production, you get a corresponding reduction in demand. If you use Wright's law to model Tesla's cost decline, you'll see that, as we saw them announce at Battery Day with the $25,000 car they expect to produce over the next few years, that electric vehicles are really reaching price parity with gas-powered cars. And that's going to cause a very important inflection in demand. So the total cost of ownership of an EV is already lower than a gas-powered car, but now the sticker price is going to be lower, and that's really what consumers look to. So we think electric vehicles are the future, and we're really just in the early innings of this. Tesla in their release pointed out that 97% of cars out there today, gas-powered cars, and actually 98% of their trade-ins are gas-powered cars as well. On the capital efficiency side, one thing that we changed in our most recent price target is we actually think that they could be more capital efficient than we were previously given them credit for. And that's as we've seen them build out production in Shanghai and sort of across the globe. We've seen that they actually can lower that cost per car a little bit more than we had initially anticipated. But again, that larger story is really that long-term cost decline curve with electric vehicles that we've done some work on.
Yeah, certainly they've been talking plenty about the cost. The average cost per vehicle across its model line was $84,000 back in 2017, and now it's only $38,000. So we see that movement. I'm interested in the overall competitive landscape, though, because you say this is like sort of a seismic shift we're seeing in the whole view on electric vehicles. Is there a worry, though, that with GM, with Volkswagen, they too can drive down the cost of electric vehicles, and we're basically at peak market share for the likes of Tesla?
Yes, actually, and that's an important part of our thesis, that we think that other players will enter the market with competitive electric vehicles. In our model, we don't expect Tesla to take more than 20-some% share of each segment that they enter in the vehicle space. We expect other automakers to come in there. But what we have seen is that Tesla is still much further ahead on performance and price. If you model those two, Sam Corris, my partner analyst, has done some work looking at the charge rate versus cost. And if you look at Tesla's lineup, other automakers, may be able to match performance, but they're doing that by producing a very expensive car. Tesla's the only one who's able to produce a very high performance and relative to competitors, an expensive vehicle. So we think they're still at least 3 years ahead of the competition. But that said, we do see a lot of uptake, especially of the smaller electric vehicles in China, for instance. Electric vehicles are going to happen, across the globe. And it's not just going to be passenger cars, by the way. We think it's going to be machinery. We think we've done some work on electric semi-trucks that could actually be cost competitive to rail. Electric vehicles are really the future everywhere. And we expect many companies to participate. But again, not everyone will be successful. There will likely be some consolidation in the space.
You're, of course, a long-term holder, Tasha, to a large extent, in terms of your thesis is a longer-term perspective. But when you're seeing the share price, not moving that volatile right now, off by 1.8% in after-hours trading, in the market, the options pricing, we're seeing swings of anywhere up to 7%. But do you think the market just had anticipated all the good news and we needed more in terms of a blowout for a real performance today?
That's a possibility. I would say that when you look at Tesla as a stock, you really should look to the long term. So, we take these earnings periods as time to learn more about the company, of course, listen to the calls, get more details on things like the autopilot updates that are very exciting that they're enabling. But overall, I think, Tesla is an innovation story. So at ARK, we invest in disruptive innovation, and we have a 5-year time horizon on all of our investments. So I think when you look at disruptive innovation, things can change really quickly. You see that with exponential growth. So you really want to look at it over a longer term horizon. So I think there could be some immediate reaction to this news tonight. But I would say that we are certainly keeping in term we are certainly looking for the longer term picture here, that 5-year picture for both autonomy and electric vehicles.